Hey, good evening. So I'm on this chart and let's just go over. It's going to be a quick video. Let's go over literally how the banks are really trading so you guys can really understand where I'm coming from. All right. So let's see how we can go through this. All right. Understand this. All right. Right now, let's say this is the original, and I think I even spelled that wrong. But anyway, it's the original short, which means that the smart money, all right, big banks are going to start the trend down. Now, whenever the original order, okay, whenever the original order is put in place, they do not close that order until it gets all the way to the exhaustion point. Okay, they keep this open. However, as they sell off, they also open up a temporary long position. This is where they're going to make their money by selling these temporary long positions. So, all right. So remember, this order is still in play. Markets drop. All right. They buy. Okay. They open up a long position. All right. What happens? Retailers come in and they buy. Okay. So these retailers are now buying. And so the institutions are selling to the retail who buys. All right. So if they're buying, then who's selling? These two bought here. So they sold here. Market goes back down. Okay. And once again, they open up a temporary what? Long position. All right. Market comes back up, sell to retail. Temporary long, sell to retail. Temporary long, sell. So you see, we're creating what? Low, lower high, lower low, lower high. This is how your lower highs and lower lows are created. It's created by a temporary buy order that's only being used to generate liquidity. They need the retailers to come in and to buy. Okay? Because when you see a market dropping like this, sometimes the retailer feel like, hey, I wanna go short. It's going down too. Well, guess what? Some of them do sell right here. The problem is if you're selling, they're buying, but they have bigger buying pressure. So the buying pressure forces the market come up. Remember, all moves on markets are on the chart are nothing but imbalances. Okay, so if you have an imbalance of more buy orders than sell orders, then it's going to go up. And if you have more sell orders than buy orders, it's going to go down. So the original starts with a tsunami of an ungodly amount of what? Sell orders that pushes price down. Okay. But then they have to nickel and dime on their way down. And what they're doing is they're taking profit along the way. Okay. So this is the profit taking. This is the profit taking. Okay. These corrections are profit taking. They haven't fully realized all of this. They keep these orders, all right? They keep these orders in play, all right? And then when we get down here, they do what? They will and deal. So now it's moving sideways. Okay. I'm gonna stretch this out some. All right. And you have this. Okay. Let me try something. Let me see something right quick. Hold on, guys. All right. I'll go back down. Let's do this. All right. So we got these in play. Okay. Now, since we have this box down here, all right, now we're going to start what? The new long trend is going to start. And from down here, we now have this. We have a breakout, and then now we're going to reverse it. We're going to do temporary shorts. Why? Okay. We short it. Okay. Market pulls down. Well, guess what happens? All the retailers are going to do what? They're going to sell. Okay, but but you're going to buy. Smart money is going to buy from the retail. Okay, temporary short buying. But remember, this original buy order is in, but now we're doing temporary shorts. So you're doing this temporary short to get it to come down here to force now that the retails will do what? They will sell to you. All right. So now you're building you're making your money. Okay. You're making your money off of what you accumulated in here. The retail are. I mean, the institutions are. All right. Same thing. Temporary short. All right. And then you're buying. Okay. You're buying from there. All right. You're taking all your, what I'm saying, your profits. All right. So that's what you're doing, right? Temporary short buy. All right. Let's move this over right here. You got another. We're buying out of here, or the institutions. All right. They do a temporary sale order. Then another buy order comes in. Okay. While still keeping the original one intact. All right, and it goes all the way. All right, and then guess what? We come back to what? Another area where now it's willing and dealing, and then an imbalance happens. You have an ungodly amount of buy order come in, and it does this. All right, guess what? Institutions don't really make money on this run up. Now, retailers can. You can make something on this, but people think that they make money on all of this. It's not true. Yeah, they make some money. Don't get me wrong. It's just that they're too big and there's not enough what. So if this is just keep going up, what does it mean? It means that there's not enough selling. There's not enough. The demand was so strong in buying, it pushed it out. But here's where they make money. So the selling of the original new loan orders start in this box up here that I will put. Right. So this all of that and going over to your right even more. All of this originated from all that. This is where all of this gets what? Distributed here. Okay. All right. And then orders out of here also are being, you see what's happening? Where they coming off of these orders. So this is why we can move like this. You could consider a whole entire box as just an area of taking what? Getting profits based off all of the imbalances in here. Okay. I know it's a lot of arrows on the chart. I'm going to get off of these. All right. So I hope you understand that. I want to keep this video real short about that. So just a little small little recap. All right. Remember, they open up original positions. They do not close that original position. However, they do a temporary buy orders to cause a correction in the market to revisit. That is done so that they can sell it to the retailers and do us down. On the flip side, when we're going up into an uptrend, all right, they put in that one big order, it bursts out, all right, and then they temporary short it, right, by selling, right, so that it can come back, and then now they can buy from the retail, right? And we just continue this process. So I hope that helps, and I will go over um, a reversal like head and shoulders pattern, and I'll show you how the head and shoulders pattern really plays out. That's because the banks have officially closed their original short. Spell this right while I'm here. All right. So your original on the head and shoulders, like I said, I go over a video over that, going over that, and you'll see the same thing with an inverted head and shoulders. Inverted head and shoulders means that the original buy, all right, now it's in play, all right. After that pullback, the left or right shoulder, whatever, it blasts through. Same thing, all right. So I hope this video helped, and ask any questions. All right, y'all have a great one.